Hello and welcome, John Kroner with Bullseye Trader. I'd like to welcome you to the AI Holly and Market Update for Thursday, June the 21st, 2018. Well, it was a rough day on Wall Street for all the major indices today. Let's go ahead and take a look at the spiders and see what happened there. And you can see here after, a flat open, basically pretty much pulled back all day long, had a very small burst of just a wee little bit right at the end of the day, but basically finished near lows. We do have some support here, so we'll have to see if the spiders can hold it right there. The diamonds, you can see here, we've had this big, and we've been talking about this range it's been trading in, and it continued down, and we do have a couple of support levels here, and we're just going to have to see if they hold. But the 20 is turning. We're below the 50, but we're still above the 200. So it's a rough ride for the diamonds today. Technology stocks, you can see here we pretty much opened up, maybe up a little bit, just had a small gap up, and then kind of a volatile day of back and forth. Closing, well off of, yesterday's high, in fact, to the point where we have a bearish engulfing candle set up. So we'll have to see if we get some follow through on that. But the Qs have been very, very strong, so a little pullback is actually very healthy for them. But we'll see what happens tomorrow to close the week out. The IWM, once again coming off of record highs, had a pullback, and pretty much the same deal. We pulled back and we came back up a little bit. We based and then we dropped and we came up a wee little bit right at the very end. We have that bearish engulfing candle set up. Once again, been very strong. If you look at this, it's just been tracking right above that 20 all the way up. Everything looks real good. A little pullback, very, very healthy. In fact, it could probably even pull back a little bit more tomorrow. But with the bearish engulfing candle, we probably would rather not see it have any follow through. But that's where the Russell 2000s are looking. Now the IBB, we had a little bit of a volatile day here, but pulled back. But we have an inside bar formation, so a little bit of indecision here. We've had a nice couple weeks going up, so once again, we're just going to have to see what the mood is with this geopolitical scene going on and all these trade war fears and everything going on in the world right now. We've got a lot of volatility, so we'll see what happens there. In fact, let's take a fast look at the VXX, which is the fear gauge, and you can see here, we were up, it subsided a little bit and then continued up. So we do have a little bit of fear in the market right now. So that was your update for the markets. Now let's go ahead and get into Holly and see how Holly did today. I would say, and I'll just tell you right up front, she had a little bit of a rougher day today than she's been having this week. On the Holly Grail, lost 81 cents on 18 trades, and on the risk on, made 78 cents, and she made that right at the very end of the day. On the Holly 2.0, had 11 trades for a loss of 97 cents. And for the risk on, she lost $1.66. And you can see here in the Holly Grail, she was just about even on the longs and the shorts. On the 2.0, mostly had long trades, and I would suspect that's why she ended up losing. And as you can see here, as these three different hollies go through at night and run their algorithms, etc., she only had one short trade to choose from, and that's probably why she did not do as well as the others. Now the Holly Neo had 15 trades, and you can see here she had 3 short strategies and 2 long strategies, made 19-cent profit, but on the risk on lost 53 cents. And she had 15 trades is what she had in that. So if we look at the totals, she had 44 trades for the day, lost $1.59. Risk on, she did a little bit better and only lost $1.41. And for the week, 134 total trades, and the risk on profit is $21.69. So overall she's still having a good week, but obviously not a great Thursday for her. Now this might be a good time to bring up our ebook that we have out there, 5 Ways to Win in a Post-BTFD Market. I haven't brought this out for a while, but with the way several of these indices are looking, especially the Dow and the Spiders, it might be a good time to familiarize yourself with different strategies available to you in a down market when buying that failed dip is no longer working. So here is a link to it. It's case sensitive. It's on the bit.ly link, Bullseye Trader free ebook. Once again, case sensitive. I will go ahead and put a link to that in the YouTube video comments so that you can just copy and paste it. And as far as our subscription plans, we have monthly and yearly, we have standard, and we have premium. With the premium, you do get the Holly and some of the advanced features. You can go right here to, once again, the bit.ly link, case-sensitive TI pricing. If you want to type it in, I'll provide a longer link in the comments in the video where you can just copy and paste it in. If you use Bullseye 15, once again, case-sensitive, all capitals, and the Z instead of the S for Bullseye 15, you'll save 15% on your first year or your first month. And I want to thank all those that have taken advantage of that already. And it's a great software package. I think you'll love it. Go ahead and give it a shot, see what you think. And if you would like to follow us, you can follow our blog at bullseyetrader.com. You can like us on Facebook. You can follow us on Twitter or StockTwits. If you got anything out of this video, I'd appreciate it if you'd hit that thumbs up for me. And if you haven't already, go ahead and subscribe to these videos so you never miss one on YouTube. And I want to thank you for watching today, and God bless.